Hey, we're going to get rolling here today, and the strongest market in the ag complex has been the wheat market, and with Chicago wheat, we've had both some fundamental and technical support. Fundamentally, China is in here, buying almost 20 million bushels of wheat, and then technically, as you can see with this March chart in front of us, we've gotten well above the 50-day moving average for a few days. Technically, this market looks strong. Another bullish caveat in here on the wheat side of it is when you look at the commitment of traders report and how the managed money is sitting. Right now the specs are net short 120,000 contracts. That equates to 600 million bushels. What you need to realize is this last year we only produced 449 million bushels of soft red winter wheat in the country. Now, this is our dilemma, though, when we come to wheat. When we just look at a front month chart, what we tend to do is to set objectives is we use a retracement level. And from this summer high to this past fall low, our first retracement target would come in at 620, then 646, 673. So, really in rounding this, you kind of get a bounce back to the 6.25 to 675 area. You probably got to look at making a sale, and that's why we're really intrigued on making a cash sale in here, on March Chicago wheat. And this is the biggest thing in here on wheat is we got to reward this market a little bit. And then the other thing we have to do is also look ahead to new crop. And we just think a pretty simple strategy to do is, hey, if we decide to sell 10% of our old crop wheat at 630 against March, let's sell 5% of new crop, and that July sitting at 650. What you really also have to do when you're making sales is you got to tell yourself, that if you want to focus on it this way, whatever you sell and whatever you make that selling decision, it's going to be wrong. If you sold, and the market went down, you didn't sell enough. But if you sold and the market went up, you just sold too much. You got to ask yourself, what can you live with? And this brings us over to the corn market. Okay, and we want to believe corn can bounce a little bit more to get some sales in place. But over the last 4 months, we haven't had a weekly close above $5 on corn, and yet today we just had May future sitting at $5. So in our mind, we're wondering, hey, should we sell a little bit of May corn at $5? And then if we sell some May at $5, should we take some DEES off the table on new crop and do 5% of that? Let's say at 515. What can we live with? And in the big picture on corn, we look ahead to 2024 and say, what, corn's probably a $4 to $6 range, and these sales are more midpoint. But what we can't live with is doing nothing and all of a sudden have this market leak lower. We probably can live with making a small sale and have this market bounce a little bit. That's just how we feel on these markets in here right now. We're not saying there's a right way. We're not saying there's a wrong way. We just need to have a plan. The other thing is our survey last week, and first off, thank you for all the responses we got back. And when we put out these surveys, I have to admit I have some things in my mind on what I think we should be getting back, and then I got to take a look at these survey results and say how they vary from what I would have expected. And when you get to the corn yield side of it, what sticks out to me is we had 23% that had 5% or below their APH, where 35% of the respondents were 5% or above. On the bean side of it, though, 27% were more than 5% below their APH, and 26% were 5% or more above their APH. Then as you look ahead in here on these yield estimates for this January supply demand report, I mean, you have to say, if this corn yield at 174.9 is correct, if our survey is indicative, the bean yield at 49.9 is probably a bit high. Conversely, though, if the bean yield at 49.9 is correct, this corn crop is going to get bigger here from this 174.9. The other thing that really surprised me on the survey is our bean acreage figure. At the end of the day, in here, our survey results, we had 29% saying more bean acres, 13% less, the same at 58%. As we headed into this survey, I would have thought that it had been closer to 40% of producers increasing their bean acres towards our actual results. And so with that, that could maybe offer some new crop bean support if we follow through on these surveys. Again, we really appreciate you responding back to us. It helps guide us as we move ahead on making some decisions. We'll bring you another video probably late in the week with the report out on Friday. Any questions, drop us an email or give us a call. Have a great day.